Hello, Maverick traders. This is Rob Reinhold. It is April 25th, and we are right in the middle of earnings season, so let's jump into it. In this session, we're going to be talking about what happened during the day. We're going to take a look at the equity markets, the commodity markets. Then we're going to rescore everything from top to bottom, +3 to -3, and we're going to be looking for the strongest stocks in the strongest sectors and the weakest stocks in the weakest sectors.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Let's start off by just taking a look at the numbers today. The Dow Jones was down 1%, S&P down 0.5%, Q's down 2/3%, same with the Russell. All right, these are numbers that, okay, it was a down day, but at one point, these were like -2%. So we really climbed off the bottom, oil positive, gold positive, and it really comes down to earnings here. We had Meta last night announce earnings, and their earnings were good, but they said they were going to be spending a lot more money and CapEx was going up, and it caused the stock to tank. So the stock was down like 18%, 500 all the way down to 400, and the stock ended up closing at about $442. So big bounces off the bottom, and that's really what the story is. Now look, I don't want to spend a ton of time in the rearview mirror because we also have Google, Microsoft news after the bell. Let's take a look at the charts, and you can see we've got this big green candle. So we gapped down and we recovered. Again, this is a big significant candle. With that being said though, this is still a bear rally pattern. Now granted, we usually like to see a red candle here, but this is a bear rally candle. Now look, I don't want to get too caught up in this because like I said, things have already changed. And take a look at where this market is closing or trading post-market. $430. So tomorrow, let's say we get a candle up here. What is that possibly going to mean? I mean, if this is where our candle is, we get a candle that looks something like this, red or green. What does that mean in this chart pattern? We had a little bear rally, but again, gap down, up, gap up. Look, I think we're in this period where we just have to say, okay, this is the range. This is the range for the moment. And it is below the 50-day moving average, and we're going to stay leaning bearish until we can get back above it. Look, that's really all we can do here. In these types of markets, there's lots of volatility, and you're going to get big jump ups, big jump down. The best thing to do is just take a step back. All right, what is the overall chart saying? And it's saying being mildly to moderately bearish. That's what it's saying. Until it tells us different, we can't make a change. Now, this is something that, again, I struggled with early on. A lot of people struggle with. I say we can't make a change. Here's the thing. You can make a change. You can decide any day to throw away chart patterns and go do your own thing. We all know where that gets us in trading. So you literally have to convince yourself that you cannot go net bullish until we go above the 50-day moving average. Once you can convince yourself that there's no other way to do it, then all of a sudden you're going to have some consistency in your trading. So right here, right now, we're going to have to wait and see what we get on Friday. If we get a gap up and a fade, that's going to tell me, hey, there's a little bit better likelihood that we're going to get a fall down into the lower end of their area. If it is a green candle and we close up here, then all of a sudden that's telling me, okay, we might be going back up to a more neutral or a bullish thing. Right here, right now, we still have to adhere to this is a bearish market. That's just what we have to do. Even if you don't want to do it, guess what? You don't get to decide that as a trader. You only get to follow technicals. If you take a look at the heat map, it's showing you where there was some buying. Semiconductors, definitely had some buying come in there. And we also had some buying down here in energy, utilities, real estate, stuff like that. So there were little patches there, but you can see here from the beginning of the day to the end of the day, wildly different. Beginning of the day, it was like 80% down. By the end of the day, it was definitely more mixed overall. Let's go in and take a look at a couple of potential trades. We are still at a -2 on our outlook. We have not gone back above those moving averages, so we're going to stick with this -2, so more bears than bulls. I've got one bullish trade to share with you and two bearish. I don't really have any neutral to trade or to show you because I think this market, you're seeing big gap ups, big gap down. It's very tough for neutral trades, so I just don't make them in these kind of moments. Let's take a look at our bull. This is WPM, Wheaton Metals. This is a mining company, and you can see it's done very well. Gold had a little pullback, but this one didn't. And we're looking to break out of the range. I think this one looks absolutely great. Anything you want to do from here, I think 55 would be a really moderate target that I don't think asking too much of any trade. So something like a 52.50, 55 if there's 250 strikes. If there's dollar strikes, well, you can do anything you want with dollar strikes. 55 is where I'm going to be shooting for. I think it could easily go past that up into 57, 58. But since the market is overall net bearish, I'm asking all of my bulls to do a little bit less. Just less, so it's more realistic that if the market does continue to weaken. On the short side, what I'm really was looking for is I want to find things that didn't really bounce. It didn't really get the bounce. And this here is gap. It got a little bounce off the bottom, but you can see it's been going down for a while here. We had this nice base, we broke down. Look, there is a ton of support in here. So there's no question that there is going to be some, again, heavy support in here. I just am saying I don't think this is going to bounce back up and make new highs, go back above moving averages. So for me, I'm looking to do something like a 20-21 bear call spread. Basically saying I think it's going to be down below 20 by my expiration point, which is going to be in 3 weeks. And I'm going to get like 45 cents out of the spread. So it's a dollar spread. I'm getting 45 cents. That means I've got 60 cents of risk on the upside. Position size for max risk and let it go. It's either going to keep going down or it's going to be a big bounce with the rest of the market. All right, next short I want to show you. Is Americold Realty Trust. This is in the real estate sector. This is one of the weakest sectors out there. And take a look at this stock. This stock bounced today, but by the end of the day was all the way back down to its low. That's telling me this thing wants to go lower. So at 20, 22.50, if there's 250 strikes. If there's dollar strikes, then I can go a 21.23. I think looks good. Or even a 22.23. You can just do a dollar strike. Lots of good things on this one. This one likely only has a monthly options, so you're going to have to go out to that May 17th. Let's talk about tomorrow. Looks like we've got about a 1% gap on our hands on the Qs and maybe a 0.5% on the S&P and other markets. However, we do have the PCE price index. I forgot to mention that we had first quarter GDP come out much less than expected. The market initially was like, yay, the Fed's going to be more likely to ease. And then they realized, ooh, that means a weaker economy. And by the end of the day, people would come in and buy it. But look, if this number comes out hot, here's what we don't want. Falling economic growth and rising inflation. That is a recipe for a lower stock market. If this PCE price index comes out hot, I think you're going to see some people get worried saying, wait, economic growth is slowing, but inflation is still going up too much. Again, not a good situation with these markets. If this comes in as expected or lower, I think the party is extended off of Google and Microsoft's positive reports. I expect us tomorrow to close somewhere below the 20-day moving average, but somewhere above yesterday's high. I think that's going to put us in a little bit of a no man's land. Take a big step back. We're still under the 50. We're still going to be net bearish, but we have to understand at this point with earnings, there's a lot of jumping back and forth. So what we do is we make longer duration. We make longer duration trades. So what happens this week doesn't really matter. What happens this week is greatly going to affect trades that expire this week. But if you go further out, then all of a sudden this is just a little bit of noise early on in a trade, and then you can catch the trends. That's all I have for you. Everyone have a great day. Take care. Bye, everyone.